Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We are bringing the VRIC to you each and every week with our series of expert online panels. We've got a great one lined up today. We're going to be talking gold and silver mining stocks. The sector has come to life recently and doing particularly well today as we record this on May the 9th. I'm here with John Feneck of Feneck Consulting and Don Durrett of goldstockdata.com to dive into the details. Gentlemen, it's great to have you both on the show.
Thanks for having us back,
Thank you,
Jesse.
Jesse.
Yeah, it's an honor to have you back. Let's start with just an overview of the gold and silver price action thus far. It's had significant moves since I had both of you on the show. We are seeing a bit of a breakout today. Silver's, I think, a little bit above $28 as we speak. Gold approaching 2,400. Since they've reached all-time highs, they've kind of been consolidating between that 23 to 2,400 for gold, 26 to 28 for silver. What will it take to break out of those ranges in your view? Are we kind of seeing the genesis of that already start to occur? And Don, I'll start with you.
Well, we gold broke out in right around March 20th. It broke out around 2050, 2060. We just had a really big green candle there the last week of March and hasn't really corrected that much. So we ran all the way up to about 2,400 right before that Iran-Israeli conflict. I don't know how much that pushed it to 2,400 and then, but it's held 2,300, which is, a 6-week period. And now silver's joined the party, especially today. It went up about $1 on Monday, and now on Thursday here it's up about 80 cents. So silver's kind of joining the party, following gold's strong price action. I've been saying that, I think this 3+ year correction in gold, silver, and the miners is ending. It's not over yet. I think we got to get the HUI up to all the way to 360 before we basically are starting a new bull market. But we're on the precipice of breaking out. So the HUI is at 271 today. Well, it's early. We have another hour to go here before it closes. But once it gets above 275, the HUI basically starts trending and starts getting, Wall Street starts noticing it. So we're at the very beginning here of the breakout. Once we get above 300 on the HUI, then these stocks will start ripping faces off. Some of the stocks that I expected to rip faces off already are. So some stocks are early, but a lot of the juniors, a lot of the developers haven't moved a lot. It's going to be quality producers first, and then your developers, and then your explorers last. So we're still early, but like I said, higher lows, higher highs seem to be what we're going to see going forward here. I don't see it breaking down. This is a big, big shift that we've been waiting over 3 years for.
And John, your thoughts on the current price action of gold and silver? Do you concur with Don and anything you differ on and anything else you'd like to add as well?
I agree with everything he just said. The one thing I would mention to follow up what he said was the producers. Look at the earnings in late April from Newmont, the largest position in GDX, right? That's a $15 billion ETF. Newmont is the biggest position in that ETF with a 12.8% weighting, beat earnings and broke out, right? Look at Pan American just last night, PAAS. Another 7-cent beat right there from one of the biggest silver companies in the world, right? So we're seeing the big cap producers deliver, and that is going to be very bullish for the sector in general because as we see the broad market turn over, value managers are going to be noticing stocks like this because right now they're distracted still, I think, right? Bitcoin's doing well, tech's doing well, the S&P is doing well. They have other things that they can focus on. But when things start to move the other way, these are the kind of stocks that they're going to gravitate towards. If you look at the '09 rally, right, going back all the way to January of '09, GDXJ was actually up about 180% from Jan '09 to July 1st of '09. And that was on the back of the '08 correction, right? People started to look at different sectors. We call that a sector rotation. into value names to protect themselves. They didn't want to give up stock ownership. They wanted to just move into different stocks, right? If you're a portfolio manager in the US, at least, you have a mandate to be invested. And most of those portfolios have to be 80% invested at all times. So it's not like you can just go to 50% cash, right? So there's going to be a lot of love for companies like Newmont, Agnico, Pan American as we move forward. And as Don suggested, that will drip down to the developers and into the microcap stuff as well on the explorer side.
Now, there hasn't been a ton of retail participation when it comes to the gold market in terms of the bullion. There's been outflows from the GLD ETF. So in the Western side of things, we haven't seen a lot of buying of gold and silver in this rally. However, in the East, it seems to be quite a different story. And Don, you noted recently on Twitter that Chinese investors have pivoted from property to gold. So tell us what you're seeing there. And do you think we will eventually start to see retail participation pick up in the West as well?
Yeah, definitely. On the final one you said about the retail in the West, yeah, it's a very, very strange in the West. It's kind of like the sheep, the kind of the herd, following the leaders. But for instance, the retail crowd, they hate silver when it's cheap and they love it when it's expensive. It's bizarre. I mean, if silver was at $18 today, nobody would touch it with a 10-foot pole. Silver gets above 30, and you watch the retail crowd just show up and wave. It's like it's a really strange. And the reason why is because silver is a proxy for gold. And the only reason why the leaders, Wall Street wants to own gold is if they have to. And that, it's a risk off trade. So we're in a risk on trade. So in the West, we're in a risk on trade. So Wall Street could care less about the miners. But like John said, now the Newmont, Pan American are starting to throw up some really good earnings numbers. It'll bring them in. And so then you get this flip, and we'll be talking about this flip into more of a risk off trade. Then Wall Street starts buying. Yeah, let me show you how small the gold sector is. It's kind of ridiculous, right? So we're talking about trillion-dollar companies all over the place, like the Mag 7 are all trillion, right? It's 1,000 billion. Okay, GDX is only 15 billion. GDXJ is only five.
Right.
So one hedge fund could throw $1 billion into GDXJ, and it would push all the miners up. So in those ETFs, you want to own these producers. That's what I've been telling people. They're the ones that are going to participate. You want to be overweight these things. For instance, today, I mean, I was saying, the one stock back there in the bottom, back in, from November till March, I was saying, I call these stocks the Mormons. You got to own the Mormons because these stocks are all going to rip. So Endeavor, it was all the way down to $1.47. And I was basically telling people, buy this thing to the bottom. We don't know where the bottom's going to be, but you're not going to go broke. It's not going to go broke. Now it's ripped. It's at 325, up 15% today. And that's just one example. But these stocks well off the bottom. Coor was traded all the way down to $2. And I was saying, buy this thing to the bottom, people. It's at $5. So, and it's just, these things are just kind of starting. I mean, we're early. So people are kind of late to the party, and people don't like to buy to the bottom, sell to the top, which is kind of my thesis. Now, okay, so now I'll get to your question, but I had to follow up on a discussion there about miners and the pivoting and all that stuff. So yeah, China, I mean, China loved to invest in real estate. I mean, they were investing in real estate, quite aggressively over the last 10 years. Well, that investment is kind of slowed to a crawl. And so where does this money, these investors, where do they put their money? So yeah, there's a lot of money, a lot of Chinese money is going into gold right now, and it's going to continue to. So you got India and China who are aggressively buying gold, and they're not going to stop. They're also aggressively buying silver, and they're not going to stop. The reason why silver is up at $28 today, in my opinion, is because of what's happening in Shanghai. So Shanghai last night, it traded over $30. So, and it's been consistently over $30. And so if it's $30 in Shanghai, then you can't in New York, they can't push it to 25. It's $5 is just way too big of a spread. And
Right.
so that's why it's at 28. It's not because of the West, it's because of China. China's got it at $30 over here, people. So that's how much it costs you to buy gold, buy silver in China. It costs you $30. So it's putting a floor under silver. And I think the reason why silver, it's that proxy thing I've been talking about. The reason silver's at 28 and 30, excuse me, $30 US in China and is because it's a proxy to gold. People can't afford gold, they're buying silver. And so I don't think that's going to continue. Now, for me, one of the big things I'm following, yeah, I am following the Shanghai market, absolutely. But one of the things that I'm kind of keeping my eye on was two things, really. One is Japan. So Japan, it's interesting. Japan has several reasons to buy gold. One is the price of oil is very cheap right now in gold. You can buy more barrels for for gold right now. 1 ounce of gold will buy you more barrels of oil. Historically, it's like oil's cheap right now in gold. And so Japan imports a lot of oil. So it's like that's one reason to own a lot of gold. It's like instead of using yen, I mean, you just want to hold it. Their central bank. So their central bank should be holding a lot of gold because they hold a lot of yen. And then private. I think a lot of as the yen carry trade maybe goes down a little bit, maybe the Japanese start buying gold. So Japan's got a lot of money. I just think Japan's going to pick up their gold buying. So you got Japan, you got China, you got India, and now I'm hearing South Korea is buying a lot of gold. So that's all upward pressure. And then another one, there's almost a long answer, but I think I should need to mention it early, kind of in this conversation, is the BRICS. Now the BRICS, there's this total wild card here, right? Because if they create a new currency, which they're definitely trying to do, now India doesn't want it. Now, can they force India into it somehow? Or India, they give India some type of a free card, basically saying, okay, you don't have to use it, but it will all use it, something like that. I don't know how, but India doesn't want it, and the reason why India doesn't want it is because India is not an exporter. So if you're an importer, you got to have to sell the rupees and buy this new currency, which is downward pressure on the rupee. So they don't want it, but everybody else does. But if they do create this new currency and it has a portion of gold in it, I'm telling you, that's going to push gold to 3,000. That is the wild card. So the wild cards are Asia buying gold and the BRICS currency backed by gold. Those are the big wild cards. But then you got the West, which you mentioned. The West hasn't really woken up yet to the fact Costco is a kind of an indicator, right? Costco's selling gold. But the West really hasn't woken up yet to the degree that the East has. And I think we will. I think the West will, especially silver. I think silver is going to go absolutely bonkers. When silver gets to $35, my expectation is that you won't be able to find 5 ounce or 10 ounce bars on the internet. They'll all be sold out. That's my expectation.
And John, your thoughts on those wild cards that Don mentioned. How do you see retail participation in the West versus East? Do you expect it to eventually pick up in the West as well? And any further thoughts you have?
I do expect it to pick up in the West. Just in my area here in the American West, you go to coin dealers and you can't get Silver Eagles right now at $28. So to Don's point, I don't even think it's going to take 35. I think by 30, 31, people are going to see that breakout because remember, 30 is major, major resistance on silver. So when we see it break, there's going to be smart people watching that, like Don and I, that are going to jump in, to every silver junior that we haven't already bought, and we're going to play the equity side, but a lot of people will play it more conservatively and buy coins, and so it's a lot easier to buy silver coins than gold coins, right? Just based on the price. I think that gold to silver ratio is going to narrow this year and into next year, and so our top position is silver, physical silver, and I've told you that before. And in fact, when we interviewed last week on your show on commodity culture, Jesse, I mentioned that I hadn't been bullish on silver in the past 2 years, even though it was my number one holding from years before, right? We disclose everything. We say, like, this is our largest holding, but we haven't added to it in a while. we added the silver for the first time since 2020 this year at 24 an ounce on the nose. Just because I saw it making higher lows. To Don's point, it held 21, it held 22, it held 23. I figured at some point this year it's going to test that 26 level, which was resistance all of last year, and it broke through 26 here recently with no problem. So that was really bullish, and that's when we went kind of all our chips in on silver equities because 30 is in play now, right? And when 30 gets taken out, it's go time.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Well, I want to touch on global conflict and its potential influence on the gold and silver markets. Some people are pointing to the fact that it maybe has a direct correlation. Others are saying it has a short-term correlation, but it's not necessarily a sustainable kind of catalyst. So I'm wondering what your thoughts are here, because we are starting to see further escalation between Israel and Hamas. We're seeing threats being issued towards Russia by many NATO countries, France talking about actually sending troops on the ground. That seems to be a weird situation where the EU and NATO countries seem so desperate that they're willing to do anything to try to ensure that Russia doesn't win. So that could definitely evolve as well. How could all of this potentially impact gold and silver moving forward? And John, I'll start with you on this one.
Well, we wrote about the Russia conflict before it even happened because if you remember, before February 2022, we saw blood being moved around to the front lines, a lot of military movement in Russia. This was all out there in January of 2022. In fact, in December, I was talking to people overseas and they were telling me this is just an imminent situation, right? And so, you know, we saw, and personally, I feel like, just as a side note, a lot of the pressure we're seeing in nickel, platinum, palladium over the last 2 years, we saw a huge spike up like we did in that gas, and now we're seeing a huge pullback in those commodities. I think it's temporary. I think Russia is selling these commodities because they are the largest producer of these commodities to China or to someone else to fund the war effort. So we're as a side note, just loading up on nickel stocks and some other things that are super cheap right now because eventually you have to hope positively this conflict will get resolved somehow, because it's a strain on the global economy, right? Like this is a major global issue. But to your point, I think anything with gold here at 2,300 plus that is a fear trade related issue, like Don had pointed out, is going to be a bullish, item for gold and for silver because both the metals love fear, and we haven't seen that fear yet emerge. But we've got a U.S. election this year, right? We've got the Mexican elections June 2nd. We've got so many things going on globally that have nothing to do with what you just mentioned that I think can cause investors to say, wait a minute, like I didn't expect that to happen.
And Don, your thoughts on global conflict as well as political and geopolitical events. How do you see those potentially having an impact on gold and silver?
Well, the first one is the Rafah invasion. I don't know how much that's impacting the price of gold and silver right now, which, I wish that wasn't happening right now. And then we would know that these elevated gold prices don't have anything to do with that risk, which they could. And so that's, that kind of bothers me, because I mean that Rafah invasion, depending on how much damage they inflict, I mean it could ignite some type of an escalation where some of these countries basically have had enough because they've been on the sidelines, and but maybe they don't. But there is that risk there. I would say it's at least 10%, right? That if Israel goes too far in Rafah, that something could happen. So there is that risk. Now, a couple other things geopolitically. My feeling was that the Ukraine war, and I think was the trigger for gold to go higher, for basically this bifurcation that we're seeing international trade, where you're basically seeing China basically decide that it's time, if you will, to break up the US's hegemony, global hegemony. So they basically took advantage of this Ukraine war, basically became an ally of Russia. They're natural enemies, by the way, because they're basically struck both in the same area in Asia, trying to be the big dog, and they're fighting over resources. And so they're natural enemies, but now they're butting up. So China is using Russia as basically a lever to break up the U.S. hegemony, and I think they're going to succeed. And I don't think Wall Street or any of the pundits really recognize the threat that this is to the U.S.'s global position internationally and our economy. We are in big trouble here. The U.S. is in big trouble because we no longer are dictating around the world, basically creating the rules. The SWIFT system used to be, it's only done in dollars. SWIFT is only dollars, and it was basically more than 80% of international trade. Well, that's now going to just shrink. And it's just a matter of time now that the global South, which is expanding rapidly, the BRICS in the global South are basically synonymous, and this is expanding. Vietnam just said they want to be part of the BRICS. You're just going to have all these Asian countries become part of the BRICS, and then you're going to have Africa, you're going to have South America, Central America. I mean, it's basically the whole world except for Europe and the United States, and Australia. I mean, this is really, really bad for the U.S. and it's bad for the dollar because those countries, they're going to use dollar less and less. And I'm very pessimistic about what the outcome is going to be here. And I think it's actually going to begin this year. People are starting to talk about fourth quarter being a problem, for the economy and some of this stuff blowing up. I think it could blow up in the second quarter before we get to June. I know we only have 3 weeks left, but I think we're on the precipice of something happening. The U.S. is hanging on by a thread, in my opinion. It's like a house of cards. Stephanie Pomboy just did an interview, and she said that the stock market is built on air, and I really liked that comment. I mean, I really think that that's kind of what the situation is, and nobody really realizes how precarious things are. Talking about all this global. I mean, the U.S. in many respects is right now we are having somewhat of a Cold War or economic war with China and the whole global South. And it's kind of it's a game on type of situation here. And people don't realize how exactly how significant that is. And I think it's all going to start to unfold. And the other thing is, I mean, you look at the U.S. economy, maybe we'll get to that. That's a whole other, the state of the U.S. economy. We haven't talked about it. That's a whole nother question. But that kind of plays into these geopolitics.
Well, let's shift to the gold and silver markets again in terms of the stocks. And, I'm going to ask a bit of a selfish question. I was talking with Don about this before we hit record, about entering into positions and whether it's better to just not try to act smart, just buy the stocks that you've been watching and hold on for the long run. So who cares about intermittent moves in price, whether up or down on the way, or to be waiting for a correction to try to kind of time the market in that your entry position is at a low enough price that your profits will increase in the future. What are both of your thoughts on, I guess it's the old adage of time in the market versus timing the market when it comes to gold and silver stocks here? Because we've seen a lot of the big producers wake up, the Agnico Eagles, the Barricks, the Newmonts, since gold started to hit all-time highs. Don, you noted, and John, you have as well, that a lot of the explorers and developers haven't had the same big moves. What is your view on trying to time entry positions? Is it better to just dollar cost average, to just be in the market? And John, I'll start with you on this one.
Sure. So just as a follow-up to what Don said, real quick, I think that it's important for your listeners because what he pointed out there is critical. the S&P, the NASDAQ, the Russell, you name your favorite index, and look at it from March of '09 to today. You've made a lot of money. And there is going to be a comeuppance. I don't know when that's going to be. I don't really agree with Don. I don't think it's going to be by June 30th, but it could be. I think it's more September, October timeframe as we approach the U.S. election. You've got a lot going on with the Fed in July and September, right? Those are critical meetings leading up to the November election. I just see a lot of strife potentially happening, call it September to November. And to that point, like, please contact me or Don and try to get some help with your portfolio, because this is not 20 to 50% of your life like it might be for Don and I. This might be 10% or 5% of your portfolio, but it's a way to get access to things that will zig when the market zags. To answer your question, I think on the buying side for us, we've said this on your show numerous times, Jesse. We buy on the course of a year and a half, about 6 to 10 times. I don't have any magic, crystal ball to tell me this is the perfect entry point on a stock. We get it wrong all the time on our first buy, but we don't get it wrong over time. And the reason is we talk to CEOs, both Don and I, regularly. Don does a great job of that. If emailing CEOs, I pick up the phone and call them. I go to every conference. I met with 15 CEOs, as I said on your show just last week in DC at a conference. I've had 12 follow-up calls this week with CEOs. We're constantly trying to get information from them about the direction of the stock to check our thesis, right? And if you bought a stock, say, at $1 and now it's at 80 cents, well, it's 20% off. You should probably buy more, but check the thesis first and go to the management team, ask the questions you want, and then buy more, right? Lower your cost basis. So that's important, I think, is dollar cost averaging into names that are going to make it to the finish line.
And Don, your thoughts on trying to time the market versus taking more of a measured approach, as John was mentioning, buying over time?
Yeah, a few ideas here. It's harder to buy to the top than buy to the bottom. So basically right now, and when you're buying to the bottom, you're basically buying a correction. So for me, I always like to buy when the HUI goes below 225 and then keep buying as it, below that. That's kind of my buy zone. And then below 200 is load the truck zone for me. And so, but we just got out of this neutral zone. So there's still opportunity. 250 for me is kind of the neutral area where there are opportunities. And so you have opportunities from like 250 to 275, which is where we're at right now. So there's still a lot of opportunities. You're not late. Most of these companies are still five baggers. I mean, all the silver projects, I mean, they were just so cheap. I mean, they have jumped quite a bit. I mean, you look at the chart, you think you're late, but believe it or not, you're not super late. But for instance, Hecla got all the way down to 337. Buying Hecla under $4 was a really good buy, and then below 350 was just a steal. But now we're at 526. So this stock's probably going to go to 25. So you're not super late. But when it gets to $8, once it gets to about 8 to 10, then it starts to get pricey. So we're not quite there yet. Pan American, is at 12.26 and now it's at 20. But my target on Pan American is $100. So you're not super late. But once it gets to 30, you're a little late. Once it goes up another 50%. Avino, it got to 42 cents. It's currently at 78. I mean, that stock is going to rip faces off when silver runs from 30 to 50. They have 350 million ounces of silver equivalent. They're only mining 2.5 million ounces. So that just shows you, I mean, this is a growth stock. Someone's going to buy them. Someone's going to buy them because they're just so cheap, but it's still going to rip faces off as silver goes higher. So you're not late, but you're going to be late if how much you wait much longer. But that said, I think that we will get at least one more correction. Now, talking to you earlier, I mean, there's like maybe a 10%, 15% chance that you don't get that opportunity, that we just rip higher, we don't go lower than we're at right now. But I mean, if you're not in, I mean, I would basically take a position in some of these silver stocks and then try to buy them on the dip. Don't buy them all right now, but take a position and then hopefully you get an opportunity to buy Hecla, say at 450 to buy, and lower your cost basis a little bit. Now, one other thing about this, as far as if this truly is a breakout, if you will, I think that the upside on these stocks is pretty amazing, if you will. We've been waiting forever for this. I mean, we've been waiting since 2011. It's a long, long wait. But if gold, I think that gold is going to get to at least 3,000. I think 3,000 is a very conservative area, but I think we could actually target 3,500. So if we target 3,500, this makes your head spin, if you will. But if we go to $3,500 gold, all of the majors are going to be three baggers. The majors. I have Newmont being a two bagger at 3,000. So it's currently at 40, about 40. I don't know what it did today. Maybe it went to 43. It was at 41 yesterday. So two bagger, you go up 3x. So it'd be $120 stock. But you go to 3,500. I mean, it's pretty crazy what the majors are going to do at $3,500 gold. So if you own the mid tiers, it's kind of crazy what some of these stocks can do, and especially so if you go to $3,500 gold, which I think is not crazy talk, if you will, and if the GSR just shrinks to 40, you go to $100 silver. So what are these silver producers going to do if silver goes from 50, 80, 100? I think $75 silver, I think, is a legitimate number if we do get $3,500 gold. Now, I've always used $100 silver, which is, everybody says that's crazy talk. $100 way too high, Don. But if the GSR squeezes like it did in 2011, which you got went to 39, and if you get to $3,500 silver, and you get a GSR down at 40, the silver miners is going to, it's just kind of silly how the upside that these stocks have, potential that they have. But that's what kind of what it looks like.
Very interesting comments from both of you. I do want to focus in on some names that you think currently still present a good value proposition in the space. Don, you went over a couple there. Anything else that we haven't covered? And maybe if you wanted to update on some of the stocks you discussed last time, and feel free to venture into space outside of the gold and silver sector as well. John, I'll start with you on this one.
Sure. So I agree with Don in terms of adding to producers, because as the price of gold increases or even stays the same, you're seeing in earnings that these companies can be producing a lot of free cash flow, and you have to have some producers in your portfolio at this point. But the real value to us is in the mid tiers and in the small cap to micro cap space, where they haven't moved much at all yet. I mean, it's unbelievable to me that we're still sitting here with some of these names, near 5-year lows or 3-year lows. Some are worse off than that, and you're just like scratching your head that these are companies that have 1, 2, 3 million ounces of gold in the ground right now. Don and I talked to Treasury Metal CEO Jeremy Wyeth, Don, probably like a month and a half ago, and the stock was around 8 or 9 cents. It's now at 15 and a half. But they announced really good news just a few days ago, where they're merging with another company essentially, and Frank Giustra is a big investor in that, and Frank's coming into this new offering that they're doing. I talked to Jeremy's team, and they're very excited about this because they had 3 million ounces of gold. Now they're going to grow that to a larger size, and probably look, whether or not they get it into production or not is a question mark. But Jeremy's team is deep enough that they could get it into production, which I think is unique for an explorer or a developer. Because Don and I both know many of these companies are faking. They can't get it into a final, go through construction, build the mill, build all the infrastructure, and then go into production, right? So we kind of build our portfolio with names like Treasury where they could do it, and then with other names that have kind of said, hey, we may never do this. We just want to monetize this down the road. That's okay too. As long as it's at a high enough price, right? And I see names like Aftermath Silver, for example, AAGFF, that we've talked about in your program before at much lower prices. It's still very low. It's a trading at 20 or 21 cents right now. They came out with significant news February 29th. They basically said that they have 99.9% battery grade manganese. When you take a silver and copper explorer or developer like that, and then say, oh, by the way, we found all this other stuff as well, and it's confirmed, it's not like a thought, then that diversifies your company tremendously, and the stock responded a little bit, but then they did a financing because these companies continually need money. That's normal. And now it's like go time, right? Like you're going to have people interested in that aspect of the company, I think, because 91% of the world's manganese is produced in China. Like, show me North American manganese production last year. It's infinitesimal. So I love a stock like Aftermath because whether or not they get it to production, Michael has a history of getting bought out in the past, right? The underworld, which he was a part of, got bought by Kinross for 130 million bucks Canadian, and he put about 29 million into it. So he made money for investors. That's the name of the game. You have to align yourself with companies that have had success in the past, or can see a path to getting this thing to a higher price so that shareholders benefit, right? I was talking with Golden Caribou CEO just recently here, Frank Callahan, at the conference last week, and he came out of retirement for his project at Golden Caribou right now. He built that project with the same exact field team he has now, minus I think one or two people, and he's taking a second run at it because he sees the opportunity in Canada. And that ticker is GCCFF. Frank and I spent about a half hour kind of going over what his game plan is. But when you see him selling his last project to Cisco for 330 million Canadian, and now you're looking at a 21-cent stock, and you're like, this guy's gonna bring the band back together. So it's like, I think there's so many stories like this in the small and micro cap space that investors are really missing.
And Don, what would you like to add to that in terms of stocks that you're currently watching?
Yeah, so I did two podcasts. You guys can go and find it on my YouTube channel of developers. So the first one where developers were going to get into construction within 3 years, and there was, I think, 35 of those. And then I did another, I think, 17 of developers that are longer term. So it's covered about 50 developers. And my personal portfolio, round numbers, I have about 65 producers, 65 developers, and 25 explorers. So I own more exploration developers than I do producers, but I'm overweight producers. So, but like John said, the leverage on these developers and some explorers, I like exploration optionality versus just early drill stories, because I just think that the optionality is just going to be kind of a rocket ship as things get repriced higher. But the developer stories, you got to have, for me, the producers is where I'm going to make 80% of my money. I mean, I just think, that it's the 80-20, but that other 20% is, you can still make a lot of money on these developers because they have just massive leverage. John mentioned Treasury Metals. I just love this deal that they did with Blackwolf. Now, it was kind of a weird deal. I mean, Blackwolf really doesn't have anything. I mean, their NIBLAC projects, I think 700,000 ounces. Is that about right, John? It's
Yeah.
less than a billion. I mean, it's not a big project. I mean, I don't even think they're going to build this thing. I think they're going to sell it because it's not in a great location. But what they did was, this is really unique. I really liked it. They acquired a strategic investor. I tell these companies all the time the importance of strategic investors. I sent an email to Avino last night and said, look, you need to merge with Bear Creek as an equal company of equals, because they have strategic investors and they need your help to finance their mine. So you can help them finance Karani, and then they can protect you from getting taken out. Win-win for both companies. But so these companies need to be smart about protecting their shareholders. So Treasury Metals basically said, look, we can't finance this thing. So let's go acquire a strategic investor. So they acquired Frank Gustra and basically made him a strategic. They basically, because he was the biggest shareholder in Blackwolf. So now Treasure Metals has very strong strategic investors, so they're not for sale. So if they take this thing to first pour, it's $1 billion company all day long. It's currently valued at $3 million. Now they added Blackwell, so it takes them to 50. I mean, Blackwell was valued about $10 million. I mean, a small company, but they have $9 million in cash. So it's like they acquired the cash and the strategic investor. Yeah. It was brilliant. And so now Treasure Metals has 20 bagger upside. So these developers have 10 to 20 to 30 baggers upside potential. A lot of it has to do with how they finance these things, how much you get diluted. But the upside, I mean, John and I we know dozens of these plays that are just unbelievably leveraged if they can get them to first pour. And so, that's what I like to cover all three areas: producers, developers, explorers. I like to cover all three, but again, 80%. I expect to get 80% of my returns in producers. Now, about companies that have not participated yet that are still cheap. One for me is B2 Gold. I never owned B2 Gold because it was always kind of pricey. But when they acquired Sabina, and I actually own Sabina, I sold. I was like, I don't want to own B2 Gold. It's not a cheap stock. I sold my Sabina shares as soon as they made the deal. And then, so Sabina was in Canada and everybody was comfortable. The investors in Sabina were comfortable in Canada, but B2 always had mines in Africa, and their West Africa, their largest production mine, about half of their production is in Mali. And so after the deal was made, B2 got hammered. I mean, it went all the way down to $2.50. And I was like, this thing it was trading about $7, I think, maybe even $8. And I'm like, this is a ridiculous sell-off for a company of that quality. I mean, you're talking about a 1 million ounce producer. It was like silly, and it just got silly cheap. Plus, they pay a 5% plus dividend. So I'm like, I got to buy this thing. It's just silly, and it hasn't bounced. I haven't checked it today, but yesterday I looked. I think it was trading at $2.57. It's like nobody wants to own this thing. That thing's going to rip. It's going to go up to $5 in a heartbeat. And they actually gave bad news. They basically said that their project for the Sabina project is going to be delayed a quarter. But so what? 1 quarter is not the end of the world. So they're not going to have full ramp up until like the end of 2025. But it's a beautiful mine, and it basically de-risked their project. So B2 Gold, I think, is kind of crazy cheap. 2 other silver names that haven't moved yet that I think are, well, one is a massive silver miner, and that's Fresnillo. And Fresnillo is a 60 million ounce a year. I mean, I think they're #1 silver producer in the world. Yeah. And the thing is, Prince is a 10 bagger. It's like, what's going on here? So those are 2 names that just people have just ignored. Another one that people have ignored is Hochschild. So Hochschild in Peru, and everybody thought Peru had all these problems and it got sold off, but it never bounced. It's kind of like what happened to B2. It got sold off and never bounced. So Hochschild got sold off, never bounced. And then they acquired 2 gold projects in Brazil, and they stole them both. The first one they stole from Amarillo because Amarillo couldn't afford the CapEx. And they basically came in and said, look, you guys are stuck. You can't mine it. Gave them a lowball offer, and, and they basically bought it. And now that project's going in, I think it's Mara something. It's going into production this year. And the thing that's beautiful about Brazil is it's like West Africa. The cash costs are very low. Not very low, but they're low in Brazil. So you get these ASICs in Brazil around $1,000, $1,100, which is fantastic. Really nice. I mean, these companies are going to have $1,000 margins down the road. These are long life mines. And then they just acquired just as good a mine as that one, the Monte de Carlo mine from Cerrado. They basically stole that. I think they paid like $40 million or something for it. I mean, so they basically acquired 2 super cheap mines, and then they have this other mine they're getting zero. I'll finish with this. They have a mine called Vulcan. It's 8 million ounce gold project, and I think it's in Chile. That's low grade that they bought for cheap, and they're just sitting on it waiting. They used to never even talk about this project in their company presentation. They ignored it completely, even though it was 8 million ounces of gold. And they're waiting for the price of gold to get to $2,500. Once it gets to $2,500, they're going to go build this thing. So that's what, 300,000 ounces a year in gold, and they're getting zero for it. So those are the three companies that haven't moved yet, that basically all, B2 is basically just maybe a 5-bagger, but you get the really good dividend. And then Hochschild and Fresnillo are basically 10-baggers long term.
Right. Yeah. B2, a company on my watch list, it actually has gone up almost 6% today, as we speak. So maybe not quite as much of a bargain, but still you see a lot of potential there in the future. I do want to talk about an upcoming event that both of you guys have. You spend a lot of time doing shows like this, giving away all this super valuable info, including stock picks, et cetera, for free. And now you're doing a special event. It's a paid event. The entry price is not expensive. I think it's around $110. I think, John, you were saying before. Why don't you talk to us about, what it is you're going to be discussing? Obviously, you're going to be going far more deeper than we did today. Tell us about the event, what people can expect from that.
Sure. And Don, feel free to chime in if I forget something here. But Don and I guess, met about 4 years ago, and last summer we said to each other, "Hey, we should do something jointly," and that is being televised every month on my YouTube channel called Feneck Commodities Report. But it's a joint effort from us to talk about macro for about 30 minutes and then interview a CEO, um, and do a deep dive on their stock, give them the opportunity to tell their side of it first, and then we ask pointed questions, to get really to the bottom of what is going on with the company. And we've done that now for almost 12 months. And I approached Don, he didn't approach me. I said, look, we should try to do something on a paid basis because we're providing a lot of good information to the public here. We're not overcharging the public on either of our sites. Why don't we do something, maybe even quarterly, that would just highlight gold and silver related, investments. And so that's what May 16th is going to be about. If you go to fennecconsulting.com and then just click the tab that says Gold and Silver Event May, that is going to be Don and I on May 16th from 2 to 3:30 Pacific. And I realize that some of your listeners in Europe, that's kind of late. So, if anyone from your show wanted to buy the event and then watch it later, we'd be fine with, charging them the live event price instead of the replay price, which will be higher. And during that 90 minutes, we're going to talk macro. We're going to talk stuff like we're talking about on your show, Jesse, and do some deep dives on some of our holdings, but also just give investors more information about this is, as Don said, the beginning. This isn't like midway. We're in inning 2 or 3 here. We're not in inning 9 by any stretch. And so this is when you should be investing in yourself and your knowledge of the sector, because if I'm right and Don's right, we're going to see a sector rotation this year, not next year. And you want to be positioned for that.
Anything you wanted to add about the event, Don?
Yeah, one thing that I haven't really talked about in these interviews because it takes too long and it's boring as hell is the factors that you need to look at for investing in a producer, developer and explorer. So we'll get a delve into that, kind of the boring stuff, but it's important because it's a lot of people want to invest in these stocks, but it's very hard. It's very difficult. I mean, when I first jumped into this stuff, I'm a smart guy. I have an MBA, but I'm telling you, for the first year, I didn't have a clue. This stuff is really confusing as hell, to try. And I see it all the time. I mean, people on Twitter are constantly, posting these names, they send me emails thinking these companies have, good risk rewards, and they're just terrible risk rewards versus all these other names. But I get it. I mean, I've been doing this for 20 years, but so in this webinar, we can go into that. It's kind of me kind of explaining what's in my book, if you will. And so I'll probably be, I don't know how much time, I'm only going to do it for an hour and a half, but I'm probably going to spend at least 15 minutes, I think, kind of going over these 3 categories and the important things you need to be aware of so that people can understand how to risk reward these stocks.
That's great. And I think for people who watch this show, that's not boring. That's riveting, you know. Maybe for your average retail investor out there who isn't really into the sector, they might fall asleep. But for those of us who are paying attention and appreciate the work you guys do, I think that's as exciting as it gets for me. Well, gentlemen, it's been a great conversation. I'm going to put a link directly to that event page in the description below so people can sign up. And what was the date again?
Yeah, it's May 16th, 2 o'clock Pacific is the start time.
May 16th. So that's going to be 2 days after this is published.
Yeah.
So I encourage people to go there, join the event. And thank you once again, gentlemen, for coming on and sharing your knowledge with the audience.
Thanks for having us on, Jesse.
No problem, Jesse. Thank you.